Well, welcome everyone. Just about ready to get started. I can see that we've got Axel, we've got Chelsea, we've got Nick, and we've got Danielle so far. So welcome. And got quite an interesting lineup today, I think. It'll be kind of interesting for everybody, I believe. And so let's go ahead and launch into it. Got 4 online at the moment, so hopefully we'll get a few more. Hang in there, guys. It's the last week. We're going strong, and so hopefully everything will go well, and you guys will get a chance to move on to your next courses or graduation if you're graduating after this term. I don't know. Maybe you are. That would be exciting if you are. So that would be good. All right. Well, let's launch into our first topic. And so we've got a lineup where we're going to talk about what is DeFi. And we're going to talk about some crypto firms that are getting in the news for a bad way. A lot of crypto firms right now in the throes of bankruptcy and liquidity problems. And we'll talk about that and what's going on and why. Then we want to talk about what the future of digital cash is. And then we've got an article that came out about Congo. So that's interesting to see something that we studied earlier coming out and being highlighted in a new article. So that is good. Okay, so let's get started. So what is DeFi? Well, DeFi is short for distributed finance, okay? So we see the short definition down here. DeFi is an umbrella term for peer-to-peer financial services on a public blockchain. They're primarily on Ethereum blockchains, although there are other blockchains that are rising up to compete with Ethereum because the transaction fees on Ethereum, because it's being used so much, the transaction fees got really expensive. So decentralized finance then is meant to provide an ability for you, me, and everyone else to be able to deposit cryptocurrencies and receive interest at actually a higher rate than we would receive cryptocurrency interest or interest in a savings bank. So you notice that, when you deposit money in a savings bank, right now your local bank's paying maybe 1 or 2%. Oh, forget that nonsense. It's really a low interest rate. And frankly, that's just not enough to keep up with inflation, especially if inflation is running at 8.5% and you've got your bank holding your money and they're paying you 1.2% per annum. You're losing 7% on your money just by leaving it there. You've got to somehow be able to put your money to work and make more money. That's why the stock market tends to be more appealing. Well, the problem is in a high inflation economy, the stock market generally isn't going up. It's generally going down. Just a moment. So the stock market is generally going down. Well, the problem with that is, where do you put your money? Where do you get some good returns on your money? Well, it's hard to do that in an inflationary economy. But the reason why DeFi became important was that it takes the premise of being a bank, meaning you can automatically deposit your money, and being able to automatically deposit your money, you don't have to fill out any forms, so you don't need to apply for anything or open an account even. You just get access by creating a wallet, okay? The next thing is it's totally anonymous. In other words, you don't have to identify who you are in a situation like that. You just have your anonymous wallet. It's flexible. You can move your assets if you want to anytime. A lot of times these places also allow you to transfer from one cryptocurrency to another, or to actually, take your money out or put it in USD coin, which is a stable coin based on the US dollar. So it's flexible in that respect. It's really fast. A lot of times the rewards for having your money get there gets paid out about every 15 minutes or more, or less time than that, and it says 15 seconds here. So everybody can get involved with it. There's no barriers to entry other than having the technology to get on the blockchain, which means you'd have to have an internet connection or a phone that's able to connect to the internet. So how does it work? Well, what happens is a lot of times they don't have money that they would be able to lend you on a car, for example. You would be able to put your collateral up, and the collateral is usually other coin. So the collateral that you put up is coin. So you put in a bunch of Bitcoin and it's worth a certain amount. And maybe you want to take USD coin out as a loan. So you take USD coin out and put it somewhere else, and maybe you put it in your Coinbase account so you can deposit it in your bank. That's a way that you can convert the funds that you have retained in Bitcoin and pull it out and put it in your bank, for example. Well, so lending, you can lend money out in that situation, and you can also get loans based on the collateral that you put in. You can trade, you can save in there and just leave your money in there and just let it be loaned out and collect the interest. They also, some of them let you, use it as a casino and bet like you do with futures contracts, puts and shorts. Um, you know, I don't go to the casino, so I tend to steer away from buying derivatives, but some of them also allow you to buy derivatives too. Now, what are the downsides? The situation that I just mentioned to you, I did pick deliberately because let's say you put in Bitcoin when it was at, let's say, 30,000. So you put in Bitcoin and you decided to pull out USD coin. So you have a loan for a certain value in dollars because the USD coin stays pretty stable. But the amount of Bitcoin went down in value. Now what's going to happen is the DeFi, the distributed finance app, is going to call you on paying back that loan almost immediately. So you have the downside of the exchange rates fluctuating between the two coins. Let's say you decided to put in Bitcoin and take out Ethereum. Well, what happens if Bitcoin goes down, Ethereum goes up? Then all of a sudden you've got to put in more Bitcoin to cover the amount of Ethereum that you have pulled out. So at that point, it's a little bit dicey as to how effectively it works when you want to take a loan out. And then they also don't have much of a way for you to maintain records for your tax purposes too. So as you trade Bitcoin for another coin, it's pretty much the same as buying one stock and then trading it in and buying another stock. Every time you do a transaction of buying and selling the particular stock that you bought, you have to pay the taxes on either the increase or you get to book the loss. And you got to apply that to your taxes at the end of the year. At least in the US, that's the way it works. And so the situation gets challenging from a tax standpoint if you have a lot of transactions going on. But that's pretty much the same in a lot of exchanges. Although exchanges that are robust enough like Coinbase actually give you some tools to figure that data out. So that's basically what distributed finance is all about. So let's go ahead and let's close this one. And let's bring up bear with me while I look at my Word documents here. And here we go. We've got a challenge, a bit of a challenge in the marketplace with various distributed finance companies. And the problem with the distributed finance companies is that as their assets began to decline, they also had loans that they needed to pay money on. So the crypto lender, they talk about that, was one of the distributed finance applications. So Vault froze the withdrawals, and hedge fund Three Arrows Capital also filed for bankruptcy. Now, the challenge here is that, okay, when a company starts out, they have to have real money to pay people's wages. So they go out on the market and they get real money. They get real money in the court. Yeah, they get real money in the amount of loans that they need in order to proceed to build their distributed finance application, all of the coding that goes around with it, get the blockchain set up and get the smart contracts all set up, all of that stuff. So there's a whole bunch of startup costs before they even do the first bit of business. So what happened was that a lot of these companies went to each other, and Three Arrows Capital has been around for almost 2 decades. About 1 decade from about 2012 as a blockchain company, and heavily invested in Bitcoin and other currencies. They had a lot of their assets in coins. They had a lot of their loans in dollars. So they actually owed people money on real loans that they needed to pay for in dollars. So part of the challenge as they went on down here is Three Arrows Capital files for bankruptcy. Now they filed for bankruptcy in Great Britain because in Great Britain is where they had their main headquarters, okay? Then they came back to New York and filed Chapter 15 bankruptcy in New York. Now, Chapter 15 bankruptcy is just a bankruptcy that'll alerts the court that they have a foreign company with U.S. assets that need to be considered in a bankruptcy. And so they liquidated in the British Virgin Islands and filed Chapter 15 here. Now, note this thing right down here. They defaulted on a $667 million loan to Voyager Digital. Okay. That had to hurt, okay? Voyager Digital, of course, is expecting their money to be paid back on regular increments. And, of course, that was defaulted on. So what you're seeing here is a domino effect. Three Arrows Capital files for bankruptcy. It defaults not just on this loan to Voyager Digital, although it's the largest. They end up starting a domino effect of a lot of others following. The collapse of Three Arrows Capital has triggered the downfall of many other companies across the crypto space, particularly lenders who the hedge fund borrowed from in enormous sums. So here you've got a hedge fund that usually takes money from users, and what was happening is they were taking coin from users and having it invested, and so they could get a return. And of course, all the fees that they charged for those transactions, those fees then paid for their loans. Okay, just a normal bit of doing business. If you were a hedge fund just in dollar denominated amounts, the hedge fund might be invested in stocks, might be invested just in mutual funds or in money markets, who knows exactly what. Well, Three Arrows Capital was heavily invested in coin, in Bitcoin and Ethereum and various other altcoins. So what you had happen was, as the markets began to tumble, and we saw the huge amount of decline. In fact, the decline in the Bitcoin market alone has been twice as severe. It's been well over 40%. And the stock market has gone down by 20%, just to give you an idea. So the decline in the crypto market has been huge. With that decline, they had no ability to allow people to withdraw. And after a while, they stopped letting people withdraw because they were withdrawing all of their funds. And because they were withdrawing all of their funds, they also could not pay their loans. So Three Arrows Capital goes that way. Vald was the headline of this. They froze assets. Voyager Digital, if we pull this aside, nope, that's crypto. That's Celsius. That's another casualty, is Celsius. So Voyager Digital was another another victim, and Voyager now, this last Tuesday, just yesterday, filed bankruptcy in New York, Chapter 11 bankruptcy protection in New York because it couldn't pay. It now holds 685 billion in million in crypto assets compared to the 1.12 billion that it has loaned out. So it's upside down. You're supposed to have more assets to cover your liabilities when you're in this kind of business. So they're looking to try to get loans. They cut withdrawal limits, and eventually they suspended their ability to withdraw. Another company, Deribit, went to court to file bankruptcy on a loan of 80 million that they had owed to them from Three Arrows. Bancor also, and Coinflex in bad trouble. And then we get down to the crypto lenders that specialize just in lending crypto. We've got the Celsius Network, which I just saw an article that they have, citing extreme market conditions. They, after this article, filed bankruptcy as well. Babel, employees have quit because they've been freezing accounts and can't maintain business. BlockFi is trying to get people to buy them up so that they can, survive as a company but be bought by somebody who has more assets. And Genesis is another, thanks to its exposure to Three Arrows Capital. So all of these companies are in this domino effect. And frankly, there's probably going to be a whole lot less. Now, understandably, Three Arrows Capital has been around long enough that, let me see if I can get the Three Arrows Capital. This is their website. And frankly, I'd have a hard time investing in their website or in their company based on a one-liner about us. The news stopped being posted in March of 2021. They stopped posting news. So they might have had problems clear back then, but didn't really say anything. If you want to select your investments now, these links are just pointing you to other places. If I click on Avalanche, for example, it'll go to the Avalanche website, and Aave, which is another DeFi firm, just goes straight to their website. So see that there are a lot of other DeFi companies out there, and notice I haven't mentioned any of these. All of these seem to be stable for the moment, but we'll see if they survive the crypto downturn. Okay. All right, so let's close this one. And, this is kind of an idea, when I go to a company where I want to invest my money, here's Fidelity. Of course, they've been around a long time, but you go to their page and you get some information. You don't get just a one-liner about us that, oh, we're a capital fund. We get information about the Dow, and we could look at the NASDAQ and all of those. We get information from news sources. We come down here and we can learn about the company. We've got questions. We've got an 800 number to call. Definitely much more robust than what Three Arrows Capital was. And, just to illustrate that maybe these companies were not as mature as they needed to be, and now they've taken a 40% hit in the value of their assets, and having their assets hit so hard caused their downfall. So hopefully that has helped you understand what the DeFi market is and what's happening in the DeFi market. So let's go ahead. Celsius is also another casualty. Celsius has suspended withdrawals, and I saw an article a little bit earlier that they have also filed for bankruptcy. Okay, so we'll close that one. And here's some more news here. Coinbase laid off 18% of its workforce. And of course, the COO says this is intended to be a one-time event. I've heard that before. Boeing at times goes through layoffs as well. And, you know, Boeing always intends it to be a one-time thing. And went through a period of time where Boeing laid off a one-time, and then a year later another one-time, and then a year later another one-time. And so, you know, nothing seems to ever be stable when you're in a financial crisis like we are out there in the world today. So that kind of gives you an idea what's happening in the crypto world, and I think that is pretty well done for the websites. Let's go on to our next subject. What is the future of digital cash? Let's go look at what the future of digital cash might be. Okay, crypto lenders we don't need anymore. We're done with that one. And future of digital cash. The reason I brought this article up is that it's somewhat contrarian. And I like the article simply because it is a bit contrarian to what I would generally be teaching. Because when Satoshi Nakamoto first started Bitcoin, the original intent was that it would provide a new form of cash, a new form of currency that could be traded and be used to buy goods and services. Well, that dream has had a hard time coming to fruition, mainly because of the amount of regulation that the finance companies and the whole finance, what would you call it, the finance world out there has felt threatened. And of course, they've put regulations in place, and the SEC has gotten involved. And frankly, it's probably a good thing that they got involved, because it was kind of like the Wild West out there when they first started building all of the Ethereum blockchains that did distributed finance, or that did various things, and they did initial coin offerings that looked a lot like initial stock offerings, and all of a sudden they got accused of selling securities, and then a lot of those, they collected the money and never produced a product, and there was probably a good solid need for regulation. Well, what is happening in the future of digital cash? Because the postulate basically is that there would be central bank distributed currencies. Okay, so with a central bank digital cash situation, you want to, what the federal level of all these countries want to do is to be able to control and stabilize their currency. Now, their currency is a fiat currency. You know, they can expand the amount of money out there anytime they want. That's what's got us into the mess that we're in with all the inflation anyway. But, and the whole idea behind Bitcoin was that there would be a limited amount of coin, and with that limited amount of coin, that eventually there'd be a cap, and there couldn't be this constant inflation. So when there's a lot of dollars chasing too few goods, you have inflation. That's the definition that an economist would use for inflation. Well, this particular article from Wired.com. Now, Wired.com does not buy in at all to the digital revolution in cryptocurrency coins. What they believe is that the idea of having digital cash has to be very, very similar to what cash is currently. Now, in other words, I can take cash, I can go to the bank and withdraw cash, I can put these greenbacks in my hand, I can stuff them in my wallet, and then I can go various places and pay for goods out of my wallet. I don't have to use a debit card. I don't have to have a bank involved with every transaction. So therefore, the whole idea of the Digital cash is to make sure that you can spend money not being connected to the internet or to any bank directly. Okay, so that's one thing. So here they go, and this article wants to share with you what this new eCash, or Electronic Currency and Secure Hardware Act. This has been promoted by one of the senators, and it's been introduced into legislation right now, and they're considering it. And the eCash Act would direct the U.S. government to experiment with issuing digital dollars that are stored on hardware, not in bank accounts, and can be used without an internet connection. Okay, now here's the kicker, and this is where I have to laugh a little bit, because this idea for this particular act would be the new idea of new surveillance-proof currency, would surely face skepticism within government. Yes, very much so. But with paper money on a slow path to extinction, I don't carry paper money anymore. I just use my debit card. But my debit card has a list of all my transactions at the bank. If they wanted to, they could subpoena all my records and see exactly where I spent every penny in my checking account. Okay, so there is no privacy at all with my debit card, none whatsoever. But this act wants to really try to make a case that this hardware wallet should be completely like cash, meaning I could carry cash in my wallet and pay anybody I want and won't have any trail of anybody knowing where I've spent my money. Well, we'll see if that ever happens. So the original idea of Bitcoin being that it would be anonymous, not just a cash that you could trade, but it would be anonymous. And a lot of people felt that it would be anonymous, and there was a lot of graft, a lot of corruption in the early Bitcoin, and Bitcoin got a bad name because of it. Well, the early faith in crypto anonymity was misplaced. Turns out that the government was able to pierce that fairly quickly, and brought down Silk Road as one example of the criminal prosecutions that they pursued when Silk Road was using Bitcoin only as their medium of exchange. And so this person cites a forthcoming book, Tracers in the Dark, The Global Hunt for Crime Lords in the Cryptocurrency Space. So Andy Greenberg wrote that book, and it's soon to be published. And so what's basically happened is cryptocurrencies aren't private anymore. If they get a subpoena, they can eventually track the wallet to the person and eventually prosecute the person and find out where they've spent the money. So cryptocurrencies have turned out not to be all that private, and they're expecting a digital wallet that you have to load somehow to be completely able to be used without being tracked. Okay, so let's get back on track here. It says paper cash has been on the decline for years. The trend accelerated during the pandemic, and more businesses decided not to take cash. This poses risk, most notably for the so-called unbanked. In other words, people who relied just on cash because they decided they didn't want a bank account. And there's a lot of people that just take their paycheck straight to a Walmart or wherever they can get their check cashed and convert it to cash. And they take the cash, they live off the cash until the next payday, and then repeat. So the unbanked are in a situation where they have to, have some sort of a system to be able to have their cash. So what this Treasury Act wants to do is have a CBDC for the US government for the dollar, okay? And they want them to conduct a pilot that talks about digital cash being identical to regular cash. Says if we're to have a public option for digital finance, it needs to include everyone. So we need to include the unbanked as well. So a key part is being able to go offline. So what they did is they did find a company that is exploring this option. They have technology that's been out since 2021 called Whisper Cash, and that Whisper Cash allows them to get cash and use it on a hardware wallet. So what I want to do is show that to you. And put that away and pop this on up here. And what we have here is, yeah, there we go. Okay. So here we have a situation where a company has now developed an offline CDBC hardware wallet. And so what it does is you have a central bank that is the governance for the fiat currency, okay, the dollar. Let's say that we're just going to use the dollar for example. It integrates then with the current banking system to load this hardware dollar and move the money onto this little hardware device. And then, of course, it has the infrastructure. It has satellites that this CBDC hardware wallet can actually communicate with. So you don't actually have to be with an internet connection in order to have the wallet communicate to get loaded. So the payment methods, they support Bluetooth, which means you can have two of the devices close by and one person can want to pay to another person, and they can connect just with Bluetooth. They can connect with those terminals that allow you to have that contactless NFC technology. It has SMS technology or texting, that they actually have a sticker that goes on your SIM card, that the sticker is the circuitry for this technology. They have satellites, and of course then they have QR codes that can be transferring money through QR codes. So as we scroll down here, here's a picture of what it looks like. It looks like this. It's the size of a credit card. It has numbers that you can input and then hit OK to transfer money from one card to another to pay somebody. Let's say I have to pay George because he mowed my lawn and he's owed $20 and he wants to be paid. I can then generate on the card a payment for $20 and give him a code, and then he takes the code, inputs it into his, and the money transfers. That's pretty simple. Now, we'll get here, how do we get the money on there? I'll cover that here in a moment. So Whisper Cash here, this is the little sticker thing that can go onto your SIM card, and they show pictures of how to apply it to your SIM card. And literally that's the circuitry that turns your phone then into one of these Whisper Cash hardware wallets. Okay, and then they have a contactless keychain also that you can use at a terminal at a retailer that takes the NFC payments. Okay, now merchants have terminals that they can take it with, so they've developed that part as well. And now I want to scroll down here. So here's how it would work in practice. Okay, now I'm not saying that I'm really bought into this whole idea yet. It's whenever they want to load, and I have to go to an authorized financial institution, because that's what has to happen, is I have to go to an authorized financial institution in order to get my hardware loaded, okay, which an authorized financial institution could be customer service at Walmart. So they've been authorized to cash checks, and they would be authorized by whatever bank to also load these cards. So it could be a Walmart, it could be a banking institution. Okay, so the CBDC is issued by the government. Okay, so we're using the dollar for the example. So we have a digital dollar, okay? Then down here we've got merchants that have terminals set up in order to take payments from these digital wallets, from the Whisper Cash. And we have the personal wallets that have to be distributed. We'd either buy them or they'd be distributed somehow. I assume that we would actually purchase them. So here is one example of how the eCash situation can actually be turned into reality. Okay? In other words, it's not so far-fetched. I mean, when I first read about the eCash focus towards a hardware wallet that worked just like cash, it took me a while reading into the article to realize that there's also an example of what that hardware wallet might look like. And the example is actually a functioning piece of hardware that they're still in the midst of the very beginning of deploying that technology. They just have to have more countries that are willing to buy into that technology and actually have a central bank digital currency. All right. Okay, let me take a little bit of a breath. And we can put this away. And we have our last subject. Comgo. You know, that is really, really an odd name. But Comgo has been having some success recently. And their success has been in the idea of what they do is they bring people together, and in bringing people together that need to borrow on one side and need to loan or have the ability to loan on the other side. The biggest challenge in the international commodities market has been validating the assets of the person that is using the asset as collateral to get the loan. So you have companies who would tend to lie or be dishonest about what their assets are really valued at. And how do you really value assets? I mean, you might have assets in Singapore and Japan and China and the US. You might have them all over the world. So where and how do you get to where you can validate that those assets are both real and that they're actually worth the amount of money that they want to use as collateral to get the loan? And it's been demonstrated time after time after time that there is a challenge in getting accurate figures as to what the value of the collateral has been. So Comgo was seeking to come to the rescue at that point and be able to bring people together and create a system where they could put assets, put documentation of assets into the system that would not be lost, that would be there permanently. And ING in this case was the loaner of the money, and BB Energy was able to get a loan facility of, it says up here 500 million, and I'm not quite sure here what the 450 was and the extra 150, but we're talking a $500 million here that this BB Energy needed to have in order to continue pursuing business. And so they needed to be able to continue to work and get good liquidity in their business so that they could continue growing. So it's the first digital borrowing base achieved by BB Energy through Comgo. Comgo is a Swiss headquartered financial tech company owned by a number of major trade finance institutions and ING Capital LLC, which is the leading finance lender. Okay, so with that, here it states again, fraud continues to be at the forefront of commodity lenders' key concerns when extending credit. Through blockchain technology, Comgo increases visibility by connecting to the third-party providers and supplying real-time data and generating a comprehensive view of the company's trading book. I can't read them.
Do you need some help getting out to the larger screen?
Um, yes, please.
Sorry, I'm in here. I'm going to fix that for you. I apologize.
Okay, so Cumgo was just the digital agent that brought together ING and BB Energy to be able to show that ING that BB Energy had the assets and were able to get the collateral together. So um, my assistant just stole my mouse, but he's really trying hard to get some comments that you guys have written. You can put it up here. Yep, it'll be right behind. Okay.
Is that visible?
Not
anymore.
Nope, somehow it disappeared.
Okay,
move it left a little bit.
Okay.
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 All righty.
There you go. Sorry for the interruptions.
Okay. Okay. I'm just kind of reviewing the comments that have been made during the time, and my apologies for not getting to the comments right away. Let me finish up with Cumgo, and then I'll come back to these comments because they're good comments, and we'll go over those. Okay. Okay. So get my stream of thought back here. Okay, so BBE, what BBE does is it's a global and independent oil trading company. In other words, companies like this, what they do is they make sure that they can connect oil sellers with oil buyers, with the sellers with the distillation plants and the places that actually pull together and actually produce the other products out of the oil that get produced for the marketplace. So they have 300 employees in 16 trading offices worldwide and approximately 450 employees, including their downstream businesses that actually do business with them. So Comgo then is the Swiss company. We already talked about that. So Cumgo then was successful in putting together the information that BBE needed to provide to ING, and then ING then was able to validate that data and then come together to provide the $600 million worth of financing that they were applying for. All right, so let me hit some questions here. Okay. Okay, so the first question came by Axel, and Axel, you got two questions in there. Do I think at this point the market can recover? I'm assuming, Axel, that you're talking about the cryptocurrency market. I've been through 3 of these downturns already, and yes, I believe that it will recover, but watch out for those what they call dead cat bounces. In other words, just when you think it's leveling off and going to possibly start coming back up, just like when it hit 20,000, when Bitcoin hit 20,000, for example, and then hovered there for a time, that can get very tempting for people to want to come in and buy. And now it's down to 19, and it'll level off there for a while. It's not unusual to see Bitcoin go down by as much as 80% before it starts coming back up. I would watch for other indicators outside, and that would be the general markets improving, because people aren't going to invest in cryptos until they're willing to invest in stocks. And if you still see that stock market generally trending downward, I wouldn't really go into cryptos much at that point, unless the dollar, which is going really, really strong right now because there's a lot of other countries out there that are buying up the dollar because the dollar is more stable than even their currencies. If you start seeing the dollar go down, that might be a buying signal for cryptos. but I would really watch what the rest of the markets outside of crypto are doing before you actually got into buying cryptos again. Um, do I think that this crash will affect how companies like Fidelity view crypto in terms of offering them as retirement investment options? Most assuredly. I think this downturn, as dramatic and quick as it has been, will really make companies like Fidelity think more than once about what they want to do, um, and how they want to pursue going forward. So yeah, that remains to be seen exactly what they'll do. I think when it stabilizes, they may start going back to it. So. Huh. Okay. Well, that's an interesting question. Axel just put a question in the chat. He says, "So I heard that tokenizing assets can increase their value. I hadn't actually ever heard that, and I don't know how that would be possible. When you tokenize it, sometimes it can increase value just because you can spread it among several people, and there can be some excitement in buying a part of an asset. But it would be more fluff valuation increase rather than a real increase. So I don't think that any appreciable increase would ever happen just because you happen to tokenize an asset." Okay. So Danielle asked about, I assume, Danielle, that you're asking about the Whisper card, and it sounds like a debit or credit card somewhat. Um, it is kind of like one of those reloadable Visa cards that you sometimes get, that parents will sometimes get and send to their kids in college and stuff. It has a certain amount of money that you send to the credit card company, and then, when it's gone, the college student can't spend anymore. It sounds a lot like that, and probably works a lot like that too. So it it definitely is a reloadable wallet that you would load, digital cash onto, except that, you would actually be able to have change in their wallet without weighing it down too much. So that is good. Um, do watch the rest. By the way, I have another channel if you're really interested in the economics of what's going on in the world. I have another channel called Pharos Economics, where I talk about the what is happening out in the world today. I talk about the housing market. I talk about inflation. I talk about unemployment. I talk about all of the various things that are happening with the money supply and how they've charged inflation and made it grow so much. So that is an option if you'd like to go look at a few videos there. And I try to keep up on the current trends in Pharos Economics as well. All right, we have another question. I see a number of places in a tokenizing world of art. Yes. Kind of like the wine example from a few weeks ago. Yes. Lets people own a small percent of an expensive piece while letting the museum display it. Yeah, that would be true. Um, it's great to be able to own a little piece of something. Um, the question is whether it really increases in value or not. I suppose if the art piece increased in value, like if you owned a Van Gogh or something and it continued to march forward in value, and it went up to an auction house and got your money, that you would have to be paid off as a partial owner. And at that point in time, you might see an appreciation. Absolutely. But it would be dependent totally upon the art or collectible itself, and not whether you tokenized it or not. It's just ownership at that point. All right. Well, I have certainly enjoyed this little trip. Um, Sorry for the little interruption in between, and sorry for not noticing the chat window. I've got to work on making sure I can see the chat window. But today, when I set up, for some reason, I couldn't see it very well, and then I got started and couldn't fix it. So glad for my assistant coming and helping with that. Okay. Any last questions before I close off this session of ours? Very good. Then have a great week. I'm looking forward to grading the last of your papers and giving you all great grades because you do a great job. And hopefully we can send you on with to the next class and go. Adios, great class. Not everybody. Good luck on finals. Yep, yep. All right. Thanks a bunch for coming, guys. We'll look forward to seeing you again later. Thanks.